I think, so first of all, the reaction to Moody's is understandable because markets was pricing in a much worse scenario. So the relief, clearly, we were expecting it. And we are now seeing possibly a 10-year BTP bond spread in the 250, 280 basis point area in the next few sessions. That said, there are still uncertainty looming, so volatility will probably stay high. It will
abate. There was a lot of negativity, wasn't there, though, in the Moody's report? It wasn't that they got the negative outlook, but there was a lot of negatives in the sense that when we spoke to Moody's, they were looking for that dynamic modelling, whether the spending policies of the government would stimulate growth. But one of the comments, the plans do not comprise a coherent agenda of reforms to address subpar growth. That was in the Moody's statement. So they're saying the reform agenda was not enough to stimulate growth.
Yes, I think, I mean, that's also what we think. I mean, the budget in a certain sense was also a bit disappointing to us in the sense that they put a lot of, like for instance, a lot of billions on the pension, on the scrapping of the pension reform, which in our view is questionable if it will stimulate growth, but for sure it puts a further burden on public finance. But that said, Moody's downgrades Italy just one notch above junk. So I mean, the statement reflects this rating, which is quite low. So,
Chiara, one of the arguments that comes up a lot, and I hear this from a lot of people, a lot of pushback, is that the ECB are stepping away from the market. The ECB own about 20% of BTP's outstanding. We know that they're going to be stopping their active QE program by the end of this year. We'll still be reinvesting, however. How much of an impact is that going to have on the BTP, and also where is the marginal demand for BTP is going to come from if the ECB are stepping away?
So two of the sectors that we indicate as the one that have more space to increase their exposure are for sure households, which have slashed their exposure over the last few years because of the relatively unattractive yield, and they actually could come back now because yields have gone higher, so they could find the new levels as attractive. And the other one is of course non-resident, and here we always say it's a game of confidence. Ultimately that's what Italy has to play, but the constructive statement that come out from the EU since Friday, and also the fact that the government seems to be willing to have a constructive approach to the debate, this would help. Sure. Some
of the comments this morning, the way they're trying to sort of meet those market expectations. De Maio is also saying the government has no intention of leaving the euro. So again, reiterating that we're not talking about an Italy exit here, but he says the government's ready to sit at the table and discuss with EU authorities. And this is the issue. We're still at loggerheads. The European Commission doesn't want to have a discussion necessarily about these budget deficits, just wants the numbers to fit into the program. But Italy keeps on wanting to negotiate. If Italy negotiates, and everybody else might want to go back and negotiate as well. And this was the Austrian line we heard this morning. Surely we have the message around Greece and tackling debt. We don't want to go down the same pathway again. Why doesn't Italy get the message and do something about it?
Well, I mean, there is a very populist government that's been elected, and they came in on a certain mandate. And don't forget, before the election, they were saying that universal basic income was something they wanted to do. So I think that a 2.4% budget deficit is, from their perspective, probably very conservative, considering what they had once wanted. But look, in terms of numbers, we can discuss the politics and the geopolitics of the issue until the cows come home, and there's really no way to know what happens next. But historically speaking, the BTP bund spread is about 120, 130, give or take, on average. And today we're closer to 3%.
It depends what time frame you're looking at. Over the last couple of years, yes.
No, but I mean going back to 2000 or so, right? So I mean that takes into account a lot of swings. Now I agree, it's impossible. It's a subjective question, but I think that possibly represents a decent valuation at present.
But Fahad, don't you think also as well that well, coming back to the valuation standpoint, but also it's not about relatively where it's trading versus bonds, but also what the absolute cost of funding is, and just looking at some of your numbers. Chiara, if you break down the average cost of funding for Italy today, we're still at around 1%. This is a far cry from 3, 4, 5%, where the debt becomes unsustainable. And I think many people don't realize that because of these years of very, very low interest rates, as a consequence of that, Italy have been funding at very low rates themselves.
Yes, and the cost, even more, the cost of debt, it tends to be a very sticky variable, in the sense that because the Treasury managed to lengthen the average debt maturity to almost 7 7 years, which is in line with the other European countries. Basically, it takes a lot of months of very stressed level of cost of funding to get the cost of debt sizably higher. Other than that, I mean, it's, as I said, the cost of debt is very sticky, so it's the variable we are less worried about at the moment.
What are the implications for the ECB this week then? We've got Italy now just fighting over this budget deficit with the European Commission, but as the ECB tries to spell out its program to investors, do you think there'll be any change in the reinvestment policy?
No, I don't think it will come at this meeting. I think the ECB is the central bank of the Eurozone, it's not the central bank of Italy. They have said many times that they don't mingle into idiosyncratic risk or political domestic risks. So
I think issue warnings on the side, because that's what we had from Draghi last week, trying to send a message to Italy, it seemed, around tackling some of the numbers that could put it in crisis next time round.
Yes, I mean, very high level sort of warnings, but what I think the ECB, the only time when they could intervene if they see a fully fledged contagion in all the Eurozone, which is not what we are seeing now.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.